Hey, good morning, everyone. It is April 4th. Wow, April 4th, 2023. It's Tuesday. Hope everyone's doing well. I'm a little bit under the weather, so I do want to make this a little quicker. There's not too much crazy stuff to talk about. I'll give you guys some levels and some ideas, and what my thoughts are on this market. I'm probably not going to be trading today. I don't feel well at all, but I wanted to give you guys this update, as we do have a short week anyways. So this week, there's a few things that I do want to talk about, considering how this market has been continuing to the upside, right? We were looking for some of those buyers, and I think that we can still continuously look for some of those buyers to continue this upside. I think there could be a little more of this upside, and it's going to be pretty hard to call tops until at least we see some kind of red day, right? We can't just keep shorting this viciously, as breadth is still very high in the market. Now, when breadth gets to this point, breadth can stay overbought for quite some time and sustain some of the upside. There are a few breadth indicators like R3TW that haven't necessarily hit, excuse me, their peak, which could suggest a little more upside. There's other breadth metrics that are into that overbought territory. However, they do tend to stay there, meaning that we can chop and slop into some more of this upside or just some sideways movement at these points. So one of the main things that I do want to say is that no matter how overbought a market looks, if you're looking at order flow and you're looking at how buyers are actually entering this market on a day-to-day basis, you can see that if there's no offer in the market and there's a sustained bid, realistically the price is going to continue going up. Now, there are a few other things that I do want to talk about in terms of different news events, right? We have some central banks, just like in Australia, that are pausing their aggressive tightening cycle, holding rates. On Tuesday, for the first time in over a year, the policymakers kept official cash rates at 3.6%, taking a key timeout to size up the latest market happenings and economic developments. So, we'll see if this affects any other areas in the world in terms of their rate hiking cycles. I don't necessarily think that Australia is going to be the center point of the economic policy for the remainder of the world, but it is interesting that there are some places that are, after a tightening cycle, have decided to scale back. While growth keeping the door Oops, sorry. While keeping the door open for a return to a rate hike, growth and stability concerns might soon overtake inflation threats in terms of central bank top priorities. Other global banks have also been tightening at a rapid pace, with the Federal Reserve hiking interest rates by 475 basis points in 9 consecutive meetings. In other places, right, we saw the ECB. ECB is continuing its tightening cycle, although less aggressive. I think the US is by far the most aggressive in the current tightening cycle. So, if you look at this on a deeper level, right, the financial turmoil erupting from the collapse of Silicon Valley Bank, which is now listed on the OTC market, trading at pennies, Credit Suisse and others, hasn't helped the situation as central banks attempt to engineer a soft landing to avoid a recession. But realistically, a lot of things do keep piling on, which is making it very, very difficult for this to happen. Now, events in the banking system might also contribute to significant tightening in credit conditions over time. And in principle, that means that monetary policy may have less work to do. So Jerome Powell noted in the last FOMC meeting, possibly foreshadowing a coming decision, whether the Fed ends up pulling the trigger for another 25 basis point hike in May still remains to be seen. But according to FedWatch futures, if we take a look at what's going on right now, with the probabilities of whatever rate hike comes out in May. Let's just load this up and take a look at this. Currently, we sit between 475 and 500. There is a 61% chance that we go up by 25 basis points in May, and the remainder stay stagnant. So in June, we see the majority is pricing in for one more hike by the halfway point of the year. So very important. We also have energy. Energy is one of the things that I do want to talk about. Remember, yesterday we had a very, very strong gap to the upside in a lot of energy stocks, and we saw a large push in energy and oil generally. We also saw some comments from the U.S. administration officials that are pouring into the surprise production cut from OPEC Plus and excuse me, WTI crude oil futures, they held a lot of their gains, climbing 1% into about the 81, $81.25 a barrel mark. And this is after a huge, huge gain on Monday. And while 12 of the top 15 S&P gainers were seen in the oil and gas sector, not every analyst is seeing $100 oil as a lot of people have said. Remember, Goldman Sachs, they were looking at 130. Other analysts, they were looking at 100 plus. And it's not going to be as bad as you think. President Biden said before boarding Air Force One on a trip back to Washington, but there were other remarks from Treasury Yellen and some other people. But regardless of that, I don't necessarily think that oil is going to sustain too much of this upside. I'm actually looking for some potential turning points in oil, right? The oil short at these prior lows before we got this massive news and massive production cut surprise. A lot of people were looking for that short. Realistically, I think that oil becomes a much more attractive short into 82, maybe $83. If we do get there, I'm going to watch it on a day-to-day basis. But this massive gap that happened from the overnight Sunday session leading into Monday, I think that we can potentially fill that. And I'm looking at a rejection into some of those areas, which means that we could be topping out in some of the oil stocks as well. So keep that in mind. Um, duh, duh, duh. We also saw that there's some news that Bank of America's sell side indicator. What is this? A Bank of America sell side indicator, which measures equity allocation recommendations, is below its lows during the financial crisis. But as a contrarian indicator, that could be good news for the bulls. So we are, for those looking for underappreciated stocks, there are a lot of them out there. I think that we are entering a regime change for the Bulls, which we might have printed the lows realistically, and it could be time for that swivel to the upside a little more concretely. Now, a few things to watch for today in terms of equities, right, and the futures market. I'll give you guys some levels. There is still some bull baked into this. I would want to most immediately hold out the 41.57 to 59 region. That is a most immediate support for the bulls, and they're going to have to hold that line desperately. Should prices manage to drop under those regions, I'm expecting one of the final dances and stances to be that 32 area. There's a lot of volume that's set up at that 32, and I would want to see if prices can hold that finally. But if we start dropping back under that like 58, 57, 59 region, I think there could be some bear side that actually comes down and tries some of these other levels. There are supports at 41 and at 32. 23 is like the final chance, but I think if we close under 23, things flip pretty aggressively. There's a pretty strong distribution block top with a lot of volume forming in and around the 70 to high 60s. So watch for that. I still want to see 58s hold as strength for the Bulls. Anything under that holds, I'm not that convinced. So keep that in mind as we get ready for the day. Now, like I said, I don't feel the bestest, so I'm probably just going to let today slide. I don't think I'm going to be doing that much trading, but keep those levels in mind, keep those areas on the futures in mind, and we'll see you guys tomorrow. Check out the room community.tradeproacademy.com. I'll be posting some stuff there today and indefinitely. So I'll see you guys there and take care. Chat soon. Thanks, everyone.